Hello, this is Bud Fox. Welcome to my contribution to this month's Ichimoku Trade newsletter. And we're going to go with trading small cap stocks and value stocks with the IMTF indicator. I'm going to be taking this segment in the direction over the next few months of taking various strategies and showing you how to use the IMTF indicator to trade those. First thing we're going to do is get right to the disclaimer. Please read through this in full. The purpose of this presentation is for educational purposes only. We do not recommend buying or selling anything. If you want to engage in buying or selling any equities, commodities, futures, forex, you should consult with your financial advisor. Once again, this is for educational purposes only. All materials and information in here is owned by the EII Capital Group. The material and the information cannot be copied or distributed. I will also be using charts from TradeStation during this segment. Okay, let's get to it. First trade that we are going to look at, symbols IVTY, IVTY. This came from our value strategy. So once we determine it is a value stock, we can look at buying it based upon certain things. The reason why I like this, first, you have clusters and clusters of crosses moving through here. So this thing obviously just ranges. If you look down here, it kind of has been staying under it. It finally broke out. We got into the cloud breakout with the green, and what I'm looking for, number one, is right here. We had a volume spike. The price was $7.75 to $8.25, and it kind of just sat around here. So let's just take a little look at that. Okay, so figure 790. It did nothing. You could have even bought more. It held the crosses all through here. Basically just doesn't move. And then all of a sudden, you get a break of the cross here. And the key in holding these things is as it moves up, you want to see the crosses move up. You want to see the dots move up. It kind of, in a way, you look at it, it's pushing price up. So this thing is just still keeps going from 790. We hit as high as 9. Close today was $9.10, and you still look good. If we want to look back at resistances, you got 920. That's our first level, and then you got pretty clear sailing. I don't see any crosses in the past or anything. So the idea here once again is you want to get into a trade. You want clusters of crosses. You want them to be moving up as price moves up. And the downside, downside again, you're going to have to, like I said, you're going to have to figure out your own risk. You're going to have to use your brain. This does not replace your brain. And you're going to have to figure out, how much you want to risk and where you want to go. So if that was the day that you started buying because of the volume spike, you'd probably want to stop below there. Below 740, so you're taking about a 50-60 cent risk if you wanted to stay in it. And there was a shake attempt here, as you can see, but it still remained bullish and obviously went up. Let's go to our second example. Lightpath Tech. Now this is more of a small cap volume play. You can see right here, breaks the cloud, you got your crosses in here. Now, I don't believe there was a real volume spike in here, except that day. But you did. You closed at the dot and the cross at about 176. Ultimately, boom. Now that's the 2 million volume spike. Stock goes up to about $2.20. From the $1.75 that we were looking at. As you can see, got the cluster of crosses and dots, and these clusters are moving up It's holding price here, so you stay in this thing. Keeps going, going, going. Now you're up to about, where are we here? 244. Have a little dip, and now you're. This could have been trouble here, depending on your risk. Obviously, you'd have to sell at least half at that point. But I mean, even in here, price it did hold. I mean, you weren't totally breaking down, and then you had another pop up till about $3. And this thing is still going. It had a shakeout here, but it's still going up. I would not be in this anymore, probably. I am not in this, but it was definitely a nice trade to here. Next one. Okay, this was a little quick because it was just kind of immediate. So you have all your crosses clustering here. You did have a little pop right there, and then right here as well. So let's see. On this day we had about 227 to 249. So if you were in this at say 245 on that pop above the cross, the next day a dot showed up, cross stayed where it was. Then you had the big volume spike. However, this was this went as high as 456. So I would not have waited around if I owned this at $2.30 or $2.40, or even 249 was the high. If I owned it at 250, at 450, I'm not even in it at 450. I'm $3.50, $4. I'm gone. See you later. And this obviously has had a lot of trouble in this resistance cluster of crosses up here. You see that? I mean, why waste your time with this at this point? You had it at 250. Yeah, went as high as 450. It's hanging at 330. Just get out, make your money, call it a day. Now, this was a very fast day trade. Again, this is one that mimics more of the ones that we were looking at last month. Something gets creamed. Whoever wants to sell this thing is most likely out. And then we're waiting for price to get above the crosses. But, I mean, even twice this thing has done this. You had a huge volume spike here above the cross. And you hit prices. I may have even spoken about this in last month's segment. So you got 122 here. The next day it pops to 193. The wall of crosses is holding it, so you want to get out. Pops right back down. Then you get another volume spike here above the crosses, 1.8 again. So you're looking at about say about 156. You hold it for a few days, and then boom, another big pop, hitting a high at 205. So it's another 50 cents, but you got to get out that day because it just completely fails. You would have wanted this thing to hold that 173 level. So when it gets to, it hit 206 that day from 150, your stop's got to be below here. Got to be below that 173. You'd probably sell some here because you're hitting the cloud, and then you're getting out. And again, the risk on these are very low. It's really up to you on how much heat you want to take on these, but you're using the crosses plus an offset. It's pretty simple. Now, the last one that I'm going to go through, this is another value play, but this came from our long-term value strategies. Gilead Sciences, I'm sure a lot of you know it. Things been gotten crushed, and it appeared on our value spreadsheet, and it's coming down, and the crosses are serving as resistance here. Can't break it, can't break it, can't break it. Start to consolidate a little bit, and we're consolidating. Look at that, double bottom. So I'm looking at the crosses. 66.45. This day closed 66.25. Now, this day the crosses moved up 20 cents and we closed above them, so you can get in there. Say, what price is this here? About 66.75. I believe that was an order that we used. 66.75. Now we've popped. It pulls back. Right about there is what we'd be looking for. So now we've got a battle going on. Is it going to hold these crosses and then hopefully perform a cloud breakout? And then the technicals will line up with what we believe is the value play or not. We've gone through a bunch of different examples, how to trade using volume with small caps. We've shown trending plays. We've shown counter trending plays. Obviously, if you're going to go for a value play, you're going to be buying in a counter trend situation. So you got to use the counter trend strategies. Now, last week we had talked about potential stocks that we were looking at, and guess what? We're still looking at them. NSPR, we were like in here, and the stock broke down again. So if you had gotten in at the crosses, you had to take the small loss. And we're doing the same thing. This has proven to be a very frustrating stock. Again, the fundamental metrics don't match where it is, but the technicals are just showing me that this thing is a dog. But I'm still watching it. So even today we had a volume spike, but it was 3 million shares. This stock usually trades like under 200 a day. It was still worth nothing. Closed at 67 cents, I think it, or 71 maybe in the aftermarket. But I'll still watch it, see what it's got. We still got a long way to go for it to break through the clouds, so this thing may just consolidate over time. The last one was this one. This is still just doing nothing. We're still under the crosses. The only thing now is where it's a month later. We're very close to getting out of this cloud. So, maybe in the month of May, this thing will finally go. Unfortunately, April was a tough month, so I don't have the examples for this month. Were not that great. And like I said, hopefully we'll be branching this out and trying to give you guys, different strategies, different ways to use the crosses and dots as support and resistance, and how to use them to help your trading. Other than that, this is Bud Fox for Ichimoku Trade, signing off. If you guys have any questions, you can reach us at info@ichimokutrade.com. You can also give us a call at 646-863-9620. We're usually in the office trading all day, so if we don't answer, just leave a message. Have a good one. Bye-bye.